Who are the real powers controlling the world economy? The answer to this question holds one of history's greatest secrets, and today we will lift the veil. To understand the financial system of the modern world, we must first look to history. The establishment of the Bank of England in 1694 laid the foundations of central banking. This event was revolutionary, not only for the British economy but for the entire world. How did this system evolve and take its current form? In the 18th century, the Rothschild family laid the foundations of international banking by opening bank branches in various European countries. Nathan Rothschild's ability to obtain advance information during the Battle of Waterloo and make significant profits in the market is one of the first examples of how information power can influence financial power. This event demonstrated how critical information is in financial markets. In the 19th century, the banking sector expanded rapidly alongside industrialization. Figures like J.P. Morgan, Andrew Carnegie, and John D. Rockefeller played decisive roles not only in their own industries but also in the financial system. During this period, the concept of the money trust emerged the control of the economy by a small number of powerful bankers. Following the financial panic of 1907, the Federal Reserve System was established in the United States. This system created a hybrid structure owned by private banks but regulated by the government. Critics argue that this structure operates outside democratic control, while supporters claim it ensures economic stability. During the interwar period, the Bretton Woods system was established. This system created a global monetary system by pegging the dollar to gold and other currencies to the dollar. Nixon's unilateral termination of this system in 1971 ushered in a new era in the global financial world. Modern derivatives markets, hedge funds, and investment banks have led to the concentration of financial power in a small number of institutions. Following the 2008 financial crisis, the concept of too big to fail emerged the idea that certain financial institutions must be bailed out by the government because their collapse would threaten the system. This highlighted how centralized financial power had become. Today, asset management companies like BlackRock, Vanguard, and State Street manage trillions of dollars in assets. These companies have a significant influence on the economy due to their substantial stakes in the world's largest corporations. Blockchain technology and cryptocurrencies are attempting to create an alternative to this centralized structure, but have yet to bring about major transformations. This historical development of global finance demonstrates how power has become centralized and how financial decisions are made by a small number of actors. This situation has paved the way for the emergence of various theories. The Federal Reserve System is the central banking system of the United States, established in 1913. The structure and functioning of this system are among the most popular topics of financial conspiracy theories. So, how does the Federal Reserve actually work? And how valid are the criticisms? The structure of the Federal Reserve is unique. It consists of 12 regional Fed banks, the Board of Governors in Washington, and the Federal Open Market Committee. Board members are appointed by the President and confirmed by the Senate, but the regional banks are owned by private banks. This hybrid structure is the focus of criticism. The most common theory is that the Federal Reserve serves the interests of private banks. Critics argue that the Fed's authority to print money is in private hands and that this is contrary to democratic control. However, the Fed's profits are transferred to the Treasury, and its fundamental decisions are made in the public interest. The Jekyll Island meeting is based on the claim that financiers and politicians held a secret meeting in 1910 to lay the foundations for the Fed. This meeting did take place, but the reason for its secrecy was to avoid media pressure. The Fed's main features were discussed at the meeting, but the final decision was made by Congress. At the heart of criticism of central banking is the fractional reserve banking system. Under this system, banks can lend out only a small portion of the deposits they hold. Critics argue that this amounts to money creation, while economists point out that it is necessary for economic growth. The Fed's interest rate policies are also a topic of debate. Low interest rates increase asset prices, while high interest rates slow economic growth. These policies are criticized for favoring the wealthy. The quantitative easing programs after 2008 further fueled these debates. Other central banks, such as the European Central Bank, the Bank of Japan, and the Bank of England, also face similar criticism. The coordination of policies among these banks fuels theories of a global control mechanism. However, this coordination is largely necessary for economic stability. The Audit the Fed movement argues that the Fed should be more transparent. Politicians like Ron Paul even propose the complete abolition of the Fed. However, it is unclear how a system without a central bank would function, and historical examples show unsuccessful outcomes. Modern monetary theory, MMT, argues that budget deficits are not a problem because governments can print their own money. This theory offers a different perspective on central banking, but debates continue regarding the risk of inflation. The Fed's measures during the COVID-19 pandemic have sparked new debates. Trillion-dollar stimulus packages have increased asset prices while deepening income inequality. This has reignited discussions about the Fed's role. Founded in 1954 by Prince Bernhard of the Netherlands, the Bilderberg Group is one of the world's most controversial elite gatherings. Why do these meetings, attended by approximately 150 guests each year, generate so much curiosity, and what actually happens there? The Bilderberg Group was established with the aim of strengthening European-American cooperation and consolidating Western unity during the Cold War. The first meeting was held at the Bilderberg Hotel in the Netherlands, hence the name. Participants include heads of state, ministers, business leaders, academics, and media representatives. The secrecy of the meetings is the main reason for criticism. The Chatham House rules are applied. Participants can share the topics discussed, but cannot identify the speakers. This rule raises concerns about transparency. However, this secrecy is seen as necessary to create an open discussion environment. Critics of Bilderberg view these meetings as a world government plan. The participation of powerful figures such as Henry Kissinger, David Rockefeller, Angela Merkel, and Emmanuel Macron fuels these theories. However, the decisions made at the meetings are not binding, and participants do not represent their countries. The World Economic Forum, WEF, also faces similar criticism. Led by Klaus Schwab, this organization advocates for global economic transformation through the Great Reset Project. This project became the focus of conspiracy theories in the post-COVID-19 era. The slogan, "You will own nothing and be happy," was misinterpreted out of context. The Davos meetings bring together the global elite every year. Issues such as climate change, technology, and the economy are discussed at these meetings. However, the fact that participants arrive by private jet to discuss climate change has become a target of criticism. This raises doubts about the sincerity of the elite. The Council on Foreign Relations, CFR, is one of the most influential think tanks in the US. This organization, which provides advice on foreign policy issues, has trained many US secretaries of state. Critics argue that the CFR controls US foreign policy. However, this organization is limited to research and advice. The Trilateral Commission was founded in 1973 by David Rockefeller. It brings together leaders from the US, Europe, and the Asia-Pacific regions. This commission aims to promote global cooperation, but there are allegations of secret plans being made. Jimmy Carter's involvement in this commission before becoming president has strengthened these theories. Bohemian Grove is an annual men's club meeting held in California. Since the late 1802, powerful figures have gathered here to camp and socialize. The cremation ritual fuels conspiracy theories, but it is merely a symbolic theatrical performance. Although real business meetings take place here, no official decisions are made. The common feature of these elite meetings is that they bring powerful people together. Networking, idea exchange, and informal discussions take place. However, claims that these meetings are part of a world government plan are exaggerated. Mostly, the topics discussed are the maintenance of the current system and stability. The lack of transparency in these meetings has sparked legitimate criticism. Democratic societies are uncomfortable with such secret meetings. However, claims that completely secret decisions are made are unrealistic. These meetings strengthen power networks, but the theory of a secret elite governing the world is simplistic. The Rothschild family, one of the founders of modern banking, is at the center of financial conspiracy theories. How did this banking empire, founded by Mayer Amschel Rothschild in the 18th century, develop, and what is its true position today? Mayer Amschel Rothschild began his banking career in Frankfurt in the 1762 by trading in ancient coins. He placed his 5 sons in different financial centers across Europe: Nathan in London, James in Paris, Karl in Naples, Salomon in Vienna, and Amschel remained in Frankfurt. This strategy enabled the family to strengthen its position across Europe. In the 19th century, the Rothschild Bank specialized in government bonds. Their financial support to the British government during the Napoleonic Wars multiplied the family's wealth. It is said that Nathan Rothschild learned the outcome of the Battle of Waterloo early and made a huge profit in the market. This event became a symbol of their financial power. The Rothschild family was considered the wealthiest family in the world by the mid-19th century. They had investments in sectors such as railways, mining, and insurance. Family members strengthened their social status by marrying into European nobility. During this period, the saying, "A Rothschild isn't worth a penny," symbolized the power of their financial influence. In the 20th century, 2 world wars weakened the Rothschild Empire. The Nazi occupation damaged their assets in Europe. After the war, banking houses such as Rockefeller and Morgan came to the fore in America. The Rothschild family is still important, but not as dominant as before. Today, Rothschild & Company is a medium-sized investment bank. Its total assets amount to approximately $100 billion, a substantial sum, but dwarfed by JP Morgan Chase's $3.7 trillion in assets. The division of the family fortune among numerous heirs has also diminished its power. Rothschild conspiracy theories are largely based on anti-Semitic prejudices. Forged documents like the Protocols sought to spread the claim that Jewish families control the world. These theories do not align with historical facts. The family's power was limited to the 19th century. The Rockefeller family is also the target of similar theories. John D. Rockefeller's Standard Oil Company controlled the oil market at the beginning of the 20th century. However, it was broken up in 1911 under antitrust laws. Today, the family fortune is spread across numerous charities and investments. The Morgan family is one of the most important names in banking history. J.P. Morgan used his personal wealth and influence to save the economy during the 1907 financial crisis. This event led to the understanding of the need for a central bank. Today, J.P. Morgan Chase is a corporation built on Morgan's legacy. Industrial families such as Carnegie, Ford, and Getty also held great power in their time. However, most of their wealth was transferred to foundations or divided among heirs. Claims that these families controlled the world contradict historical developments. Modern banking is now organized in corporate structures. Large banks owned by shareholders, rather than individual families, influence the economy. These banks are also subject to government regulations and are not entirely autonomous. The past influence of the Rothschilds and other banking families should not be exaggerated, but it should not be underestimated either. These families played an important role in the development of the capitalist system. However, the claims that they secretly control the world today are not realistic. The modern financial system is much more complex and multifaceted. In today's financial system, real power is concentrated in mega asset management companies rather than individual families. Companies such as BlackRock, Vanguard, and State Street manage trillions of dollars in assets. This situation has sparked new debates. BlackRock is the world's largest asset management company, managing over $10 trillion in assets. Under the leadership of Larry Fink, the company holds significant stakes in nearly all companies listed on the S&P 500. This situation has made the influence of the big 3 companies, BlackRock, Vanguard, and State Street, on the market a subject of debate. These companies manage the money of millions of investors through index funds. Index funds offer low-cost and diversified investment opportunities. However, these funds also lead to a small number of companies having significant influence over a large number of corporations. The 3 companies are the largest shareholders in tech giants like Apple, Microsoft, and Google. Vanguard Group's unique structure is noteworthy. The company is customer-owned, meaning it is not profit-driven. However, with $8 trillion in assets under management, it wields significant influence. Founded by John Bogle, the company's structure differs from other asset management firms, but still contributes to the issue of power concentration. State Street is particularly strong in the ETF, exchange-traded fund market. The company, which manages the Spider series, has nearly $4 trillion in assets. The fact that these three companies collectively manage over $20 trillion in assets highlights the centralization in the global financial system. The influence of these companies in shareholder voting is a subject of debate. Their votes are decisive in proposals for changes in company management. Their stance on environmental, social, and governance (ESG) issues influences corporate policies. Larry Fink's annual letters set the direction for CEOs. Passive investing index funds is gaining ground over active investing. This trend is leading to further centralization in the asset management sector. Funds concentrated in a small number of large index funds are altering market dynamics. Critics argue that this reduces market efficiency. BlackRock's Aladdin system is dominant in global risk management. This AI-powered system analyzes the risk of $21 trillion in assets. The system, which works not only for BlackRock but also for other financial institutions, means that global financial risks can be monitored on a single platform. The concept of the Great Reset is being discussed in this context. This vision, led by the World Economic Forum, proposes sustainable capitalism. However, critics argue that it serves the interests of large corporations and crushes small businesses. After COVID-19, large companies grew stronger, while small ones struggled. The rise of technology companies has further increased this centralization. Companies like Amazon, Apple, Microsoft, Google, and Tesla have multiplied their market values. The largest shareholders in these companies are again the Big Three. This means that power in the technology sector is concentrated in a small number of institutions. Cryptocurrencies and DeFi, decentralized finance, projects are trying to create an alternative to this centralization. However, they are not yet large enough to threaten the traditional financial system. Moreover, institutional investors have also begun to enter the cryptocurrency market. The lack of democratic control over this modern power structure is cause for concern. The fact that a small number of asset managers hold such significant power poses a risk to the stability of the financial system. However, these companies are obligated to protect their customers' interests and are subject to regulations. Contrary to conspiracy theories, this power is not entirely unchecked. When we objectively evaluate financial conspiracy theories, which claims are based on real concerns and which are exaggerated. In this final section, let's critically examine the theories and understand the real financial power structures. Power centralization is a real problem. The influence of a small number of large financial institutions on the economy is undeniable. The 2008 financial crisis brought forth the concept of too big to fail. Large banks were bailed out by the government because their collapse would threaten the system. This creates moral hazard. Large institutions may behave recklessly because they know they will be bailed out. Lack of transparency is a legitimate concern. The Federal Reserve's decision-making processes, the secrecy of elite meetings, and the complex structures of large banks are not fully understood by the public. This creates distrust and fuels conspiracy theories. Greater transparency in financial institutions is important for democratic accountability. Income inequality is related to the structure of the financial system. Low interest rate policies increase asset prices but do not increase wages at the same rate. This favors asset owners. Quantitative easing programs have a similar effect. The criticism that these policies make the rich richer is valid. However, theories of coordinated global domination are exaggerated. There are conflicts of interest among the financial elite. The interests of American and Chinese banks do not always align. Even between Europe and America, there can be disagreements over financial policy. A single global elite theory cannot explain these contradictions. Economic interests are complex. Large banks and asset managers must protect their clients' interests, otherwise they risk losing their clients. For-profit institutions act rationally, but this does not always mean they act in the public interest. Market failures and inadequate regulation can create problems. Technological change is affecting the balance of power. Blockchain technology offers an alternative to centralized structures. Fintech companies are challenging traditional banking. Artificial intelligence and algorithmic trading are changing financial markets. These changes will also affect existing power structures. Government regulations limit financial power. Basel regulations have increased capital requirements for banks. Directives such as MiFID increase transparency. Laws such as the Dodd-Frank Act limit the risks of financial institutions. These regulations are not perfect, but they weaken the claim of unchecked power. Media and public pressure are also effective. Financial scandals are covered in the media, sparking public outrage. This pressure forces institutions to act more cautiously. Social media amplifies this effect. Wells Fargo's fake account scandal and Deutsche Bank's money laundering issues came to light due to public pressure. Conspiracy theories also have drawbacks. They fuel anti-Semitic prejudices, weaken democratic institutions, and create irrational fears. These theories offer simplified explanations rather than solving real problems. Attributing complex economic problems to a single cause is misleading. The right approach is critical thinking and reform-oriented solutions. We need to acknowledge the real problems of the financial system and develop solutions. Greater transparency, strong regulations, policies to reduce income inequality, and increase democratic control are constructive approaches. Financial literacy is also important. If the public understands the financial system better, there will be less need for conspiracy theories. The education system should provide more comprehensive information on economics and finance. The media should also present financial news in a more understandable way. In conclusion, there are real issues of power centralization and transparency in the financial system. However, these issues cannot be explained by secret world government theories. In modern democracies, civil society, the media, regulatory agencies, and voters can limit financial power. The problem is not a completely uncontrolled system, but rather insufficient control and regulation. Healthy debate on these issues is important. We need to address the real problems and develop solutions without falling into conspiracy theories. The financial system affects everyone's lives, so democratic participation and accountability are essential. Instead of theories about secret powers, we should work toward an open and transparent financial system. The complexity of global finance leads us to seek simple explanations. However, we must accept that this complex system cannot be explained by simple conspiracy theories. Real solutions will emerge from approaches that understand this complexity and focus on systemic issues. This analysis shows that financial conspiracy theories both reflect real concerns and present these concerns in exaggerated ways. The correct approach is to acknowledge the real issues and seek solutions through democratic methods.